if you lose confidence in the currency, the banks, then you lose confidence in fiat currency as money. And therefore, the money is dying. It's obviously dying in Venezuela. It's obviously dying in Argentina. But it's dying everywhere in the world, even in the United States and in Western Europe. So when you lose confidence in the money, then you start thinking about commodity monies.
Michael Saylor joins us today. He is an entrepreneur, inventor, author, philanthropist, and the executive chairman of MicroStrategy, which he co-founded in 1989. We'll be talking about MicroStrategy's recent purchase of more Bitcoins, the company's long-term vision, Bitcoin ordinals and transaction costs, the future of Bitcoin, and the future of money. And in part 2 of the conversation, we'll be talking about the future of humanity itself, AI, technology, and education. Michael, an honor to host you on the David Lynn Report. Welcome to the show. Thank you for supporting the channel.
Happy to be here, David.
I'm going to start with a fun exercise here. I asked ChatGPT, and I'm just going to share my screen with you here. Can you see my screen?
Yeah, I see it.
I asked ChatGPT, why should someone own Bitcoin? I'd like you to please evaluate its response. There are several reasons why someone might choose to own Bitcoin or other cryptocurrencies. It listed 4. Decentralization. Bitcoin is decentralized, meaning that it is not controlled by any central authority or government. Number 2, potential for high returns. Bitcoin has been known to experience significant price fluctuations, which can result in high returns for investors who buy low and sell high. I guess easier said than done, but in theory that makes sense. Number 3, security. Bitcoin transactions are secure through cryptographic algorithms, making them difficult to counterfeit or manipulate. And number 4, privacy. Bitcoin transactions are pseudonymous, meaning that they are not directly tied to a person's identity. All right. Agree or disagree with what it said so far?
It's not bad. I mean, it touches, ChatGPT is pretty intelligent. And, if you ask it, why does the world need Bitcoin? It hits all the key points. If you ask it, why is Bitcoin better than gold? It's pretty good at answering that. If you ask it, how does Bitcoin compare to other investments? It's not bad. I think decentralization, security, privacy, and potential for high returns, they're all very reasonable things. So
what would you add to it?
The thing I would add to it is the reason I own Bitcoin is because it's either A, good for the world, it's an ethical imperative, or it's B, essential for the world, right? So it's ethical and it's an imperative. If you want to give freedom and property rights and hope to 8 billion people, you're not going to do it by day trading random stocks or investing in the corner delicatessen or trading options, right? If you're just a simple investor, that's not going to actually make the world a better place for 8 billion people. So Bitcoin is much more ethical than 100,000 other investment ideas. And I think the ability to give digital property or digital scarcity to 8 billion people on a mobile phone is sort of a once in the history of the human race development. It's a paradigm shift. And so the reason to invest in Bitcoin is the same reason you ought to support running water or electricity. Or if I said, would you like to teach everybody, on the continent how to master fire? Why should I do that? The answer is because life is cold, short, and brutal without fire. So it left out that part, which is actually the most important part. You ought to do it because it's the right thing to do if you happen to like humanity or believe in the future of the human race.
You mentioned to me offline that money is dying, were your words. Can you comment on that?
Yeah, I think what we see is an avalanche of banking failures internationally. The extreme examples in Africa and South America and Asia, where the banks literally sealed their doors, freeze your funds, and don't give them back to you. And I think we see an avalanche of currency failures all around the world. The extreme examples of Venezuela, Argentina, Nigeria, et cetera, Sri Lanka. But the lesser example is even in the U.S., the world's most solid, strongest fiat currency in the world today reports what is it, like a 4.9% CPI number in that range. And that means that the actual monetary inflation in the dollar is more than 5%. It's it's much more than that. The CPI is the lowest inflation number the government's not going to actually endorse, not the highest. Inflation in places like Argentina is 105%. Inflation everywhere in the world, in the world's strongest currency, the monetary inflation must be running 10%. In the weaker currencies, 20 to 30%. In the weakest currencies, 50 to 100%. So we have a crisis of confidence in currencies. We have a crisis of confidence in banks. And everywhere else in the world, if you want to actually access the strong currency, the dollar, you have to do it through a bank, but you can't trust the bank. And so there's a crisis of currency in the governments that control the banks, and a thought that maybe they're not all being run in a fair, equitable fashion for the people of the world. We could talk about that for a long time, but let's just start with the acknowledgement that the consensus is all of those things are losing support of the population. So if you lose confidence in the currency, the banks, then you lose confidence in fiat currency as money. And therefore, the money is dying. It's obviously dying in Venezuela. It's obviously dying in Argentina. But it's dying everywhere in the world, even in the United States and in Western Europe. So when you lose confidence in the money, then you start thinking about commodity monies. If I can't trust the bank, if I can't move the money cross-border, and if the currency is losing value every year or every month, then I start thinking about commodity monies. And so the thing everybody's been talking about is, what are the commodity monies? Is it gold? Are we going to trade oil? Are we going to move timber, soybeans? Well, what are your choices? If you want to move $10 million in gold, that's 350 pounds. So when it comes time to actually trade $10 million of gold, it's going to cost you $250,000 in insurance and shipping fees to move 350 pounds of gold. If I wanted to move $10 million of oil, that's 125,000 barrels of oil. That's $400,000 to ship the oil from New York to London. Okay, that doesn't make any sense, not to mention the fact the average person doesn't have space for 125,000 barrels of oil. You want to move, property, $10 million of property is an apartment building. How do I move an apartment building from Africa to South America to North America? That's not happening at all, right? So what about a painting? Okay, well, a painting's pretty efficient, a $10 million painting. The problem is it's physical, it's fragile, it's non-fungible, which means that it might burn, it might get soaked, it might get lost, it might get stolen. But if it doesn't get any of those things and you want to trade it to the rich counterparty in London, you're paying anywhere from $500,000 to $2 million in auction fees just to trade $10 million of money in the form of a painting. So, what do we have left, right? I mean, securities, you can't move $10 million of stocks across a border because they're trapped by the counterparty. Holding $10 million of an ETF at 50 to 100 basis points a year is going to cost you $500,000 to $1 million to store your money in securities. So now you see, what's $10 million of Bitcoin? 300 Bitcoin. So I can have 300 Bitcoin on a hardware wallet. I could, in theory, just remember it with a 12-word seed phrase. I can move it cross-border anywhere in the world. By the way, compare 300 Bitcoin as money versus a yacht. A $10 million yacht is 125 feet long, costs $2 million a year to maintain, and costs you $200,000 to move from America to Europe in about 4 weeks or 3 weeks. So you can see all the other forms of commodity money. They're not fast. They're expensive to maintain. They're physical, they're fragile, they're non-fungible, the fees are exorbitant. So if the world's struggling for a solution to commodity money, Bitcoin is the king commodity. It's better than every other physical commodity because it's digital, which means I can carry it in the palm of my hand. Try carrying 125,000 barrels of oil in the palm of your hand. It's better than that. And it's also better than every other commodity because it's scarce. It's a scarcity. If the price of oil goes up by a factor of 10, if the price of gold goes up by a factor of 10, if the price of anything goes up by a factor of 10, people, the collective intelligence of 8 billion people will produce more of it. But Bitcoin is the one thing you can't produce more of. So Bitcoin's the apex money because it's scarcity and it's digital. And of course, it's the dominant crypto network in the world. It's the one that everybody trusts. It's the one that's truly decentralized. It's the one that's acknowledged as an asset without an issuer. So I think the meltdown of the banks and the meltdown of currencies is driving a stampede of smart money to Bitcoin.
So on the topic of acquiring Bitcoins, I'd like to ask you about MicroStrategy's recent acquisition of more Bitcoins. And according to a recent 8K filing, in the period between March 24th and April 4th, 2023, the company acquired an additional 1,045 Bitcoins at an average cost of $28,000 per BTC for approximately $29 million in cash. That brings your aggregate holdings of BTC to 140,000, worth approximately $4 billion on your balance sheet, with an average purchase price of $29,000 per Bitcoin. Can you comment on why you're continuing to add Bitcoins to your already large reserves of Bitcoin, especially given that I believe MicroStrategy is already, among the publicly traded companies, the company with the largest amount of Bitcoins on your balance sheet?
Sure. Well, let's start with a first observation. And starting in August of 2020, if you track the performance of every major asset class that over the next 2.5 to 3 years, and I tweeted this over the weekend, Bitcoin's up 147%. The S&P's up 23%. The NASDAQ's up 12%. Gold's up 1%. Silver is down 9%. Bonds are down 16%. Okay, so why is that? Well, because Bitcoin is the apex property of the human race. It's without counterparty risk. You don't have all of the dilutive effects of running a company. You don't have people are creating more silver, they're issuing more bonds, they're creating more gold, right? You've got regulation, tariff risk, trade risk. There are a lot of reasons why the other assets don't perform as well. So let's say that I went back in time to the summer of 2020 and you actually knew what was going to happen for the next 3 years. If you had perfect predestination, you could see the future. In that case, the issue is, how do you outperform Bitcoin? So when MicroStrategy started, we bought $250 million of Bitcoin, and Bitcoin represented 25% of our market cap. What happened next is Bitcoin performed. If we had just stopped there, if we had stopped with that, then we would have actually probably outperformed the S&P. But if you actually look at MicroStrategy stock in that time period outperformed Bitcoin. We actually did more than 147%. So how am I going to actually keep up with, and by the way, I wasn't trying to outperform, I was just trying to keep up, or you might even say not lose. I was holding bonds, right? All those banks that went bankrupt, they're bankrupt because they were holding the bonds and the bonds traded down. And I just didn't want to lose slowly or go poor slowly. So when we bought Bitcoin, we were 25% of our market cap. What we did next is we actually issued a convertible bond. And so we took on some debt to buy more Bitcoin, $650 million of it. And we only paid 75 basis points in interest. So that was cheap money. The next thing we did is we issued $1 billion bond at 0% interest, zero coupon, and we bought more Bitcoin, cheap money. Then we actually issued a junk bond, no equity conversion rights. It was 6%, a bit more than 6% yield. At that time, it seemed expensive, but as you know today, it's 5% to hold the treasury bill for 3 months, right? So it's actually pretty cheap now. Then we issued some equity, $1 billion of equity. Throughout the entire time period, we rolled our cash flows into Bitcoin. The long story short, we ended up acquiring more than $4 billion of Bitcoin. Today, we've got more than $4 billion of Bitcoin on our balance sheet. We've got about $90 million of cash. So we're about 98% Bitcoin, 2% cash exposure. And if you look at our market cap, we have Bitcoin holdings in excess of 90% of our market cap. And, that number fluctuates. It could be 90, it could be 95%. But by levering the balance sheet intelligently, with a mixture of equity and debt at different time periods and cash flows, we're able to, in essence, run our enterprise software company, which is a cash cow and a stable business and a source of revenue and cash and earnings. And then we're able to use that to support our debt and our debt service. And then we're also able to construct a balance sheet that's exposed to Bitcoin. And if you calculate our enterprise value, David, our enterprise value of the business went from 600 million to 6 billion plus in less than 3 years. So we jacked up the enterprise value of the company by a factor of 10. Now, why would I keep buying Bitcoin? Because Bitcoin on average is going up 50% a year for the past 3 years, right? And the S&P is going up 6% or 8%. And the NASDAQ is going up 4%. And so what I'm doing is I'm basically acquiring a high growth digital monetary network, which is the dominant digital network. And it's like if you ran a stable cash cow company that was growing just a couple of percent a year, and you had the ability to raise capital and buy a company growing 50% a year that was the dominant monopoly in its space, that's a transformational financial transaction. Why wouldn't you do that?
I have a question about the timing of the acquisition. Do you have a fixed acquisition schedule of Bitcoins, or do you just sort of buy it when you think the price is reaching a pivotal moment?
You could think of us as dollar cost averaging.
Okay.
We are content, we're continually buying Bitcoin. We do it in the most accretive way possible. So sometimes it's accretive. It's always accretive to buy it with cash. Sometimes it's accretive to do it with equity. Sometimes it's accretive to do it with convertible equity. Sometimes with debt. It really depends from time to time. Our view is, Bitcoin is going to go up forever. There will be volatility. If you want a long-term metric, David, I think if you look at the 4-year simple moving average of Bitcoin, then when Bitcoin is trading at multiples of that, then it's getting a bit rich. But when Bitcoin is trading, around that or at a discount to that, is obviously, cheap. And so, that's sort of a secondary thing to look at. But my advice to anybody would be, if you have expenses to pay in the next 12 weeks, you have the local currency to pay them in, the peso. If you have expenses for the next, 12 months to 24 months, you hold the world reserve currency, which is the dollar, if you can put it in a bank you trust. Don't put it in a bank that's going to steal your money. But if you can actually put it in a bank you trust, then yes, hold the dollar. And if you have money that you want to hold for anywhere from 3 years to 30 years, like long-term investment capital, then Bitcoin is the right thing to do, because there will be volatility. But statistically, if you look at the Sharpe ratio and if you look at the return, it's the winner, and it's not even close, right? It's destroying every other competitor and every other competing asset class.
You are right. The Sharpe, something that people should consider, that the Sharpe ratio of Bitcoin is significantly higher than both the S&P and gold. I'll put a chart up on the screen for the audience. This next statement, I suppose I have a feeling you might disagree with, but I'll ask you anyway. So back when I was in college, I studied finance. One of our finance professors told us that, generally speaking, investors prefer publicly traded companies to not use their capital to purchase financial assets or investable assets, or be involved in the capital markets. And the reason is that investors can do that themselves, which is to say that investors can buy Bitcoin themselves. Investors would probably prefer a company use their cash to invest in their core operations, which, unless you're a hedge fund, she argued, should not be in the management of financial assets or securities. How would you respond to that?
I think as a general high-level rule, it's not unreasonable. But as with all rules, you have to consider the particulars here. For example, if MicroStrategy was buying $1 billion of the S&P index, that we would be buying a security. If we were buying Apple stock or Amazon stock or Microsoft stock, if we were buying a portfolio of securities, then first of all, SEC requirements keep that from being more than 40% of our balance sheet. If we had more than 40% of our balance sheet invested in securities, then we would be an SEC 40 reporting company. We look more like a mutual fund or like an ETF or something, and now there's a totally different jurisdiction. So obviously the exception to that rule is there's an entire class of SEC 40 companies, ARK, all the ETFs, that's what they do. That's how they add value. So we don't want to be one of those, but Bitcoin is a commodity. It is not a security. And so that's why, for example, probably doesn't make sense for us to buy $1 billion of Grayscale, right? Because you're correct. If our public company investors can hold securities, they have a charter to hold securities, and they ideally want securities to trade on the NASDAQ, operating company securities. But let's make the point here. Most people misunderstand Bitcoin. Bitcoin is a commodity. So if you had a publicly traded company that owned a portfolio of $4 billion worth of buildings, or $4 billion worth of timberland, or $4 billion worth of natural gas rights, or $4 billion worth of oil fields, right? $4 billion worth of warehouses, that actually is a very legitimate mission and a very legitimate charter or strategy for a publicly traded company, because the average investor doesn't want to acquire warehouses or millions of acres of mineral rights, right? They can't do that. They want to buy the security. So we are a security, but we're backed by a commodity. So that's the first observation that is the reason why this is not the case. The second is there are hundreds of billions of dollars of capital that would like to invest in Bitcoin or invest in any commodity, and they don't have the right by charter to invest in the underlying commodity. So that they can't buy the Bitcoin either by charter, it's against their charter, it's against their investor mandate. The second reason is there are only a handful of exchanges where you might buy Bitcoin on that would be acceptable. It would take 6 months to a year to KYC, AML, and certify and vet those exchanges. So most of those hedge funds don't have the physical, technical ability to buy the Bitcoin, even if they wanted to hold it as the asset commodity. The third is, if you notice, there's nowhere in the world where you can borrow against Bitcoin anymore. Silvergate was the last credible institution. So if you have $10 million of Bitcoin, it's very difficult to get a margin loan against it to pledge it as collateral. But in fact, the infrastructure for pledging NASDAQ publicly traded stocks as collateral with your prime broker is quite elaborate. That infrastructure for trading, accounting, collateral, borrowing is 30 years old. So that means if you're a hedge fund with $1 billion and you wanted to get 1% exposure to Bitcoin, you could buy MicroStrategy stock in 30 seconds, buy $10 million of it, and it's part of your collateral package, and you can borrow money at SOFR plus 50 basis points. And it doesn't bust your investor mandate, and you don't need another relationship, and Morgan Stanley will execute the trade. Now, if you read that literal, academic observation, you say, well, investors don't want to invest through a public company. It's like, okay, well, you can go back and change your investor mandate, rewrite all of your rules, spend millions of dollars lawyering, get consensus over the course of 24 months, spend another 12 months trying to figure out what exchange to buy it on, then spend another 12 months vetting the custodian. And after about 5 years and spending millions of dollars, then you'll find you're capped out at 10% of your capital being a commodity for tax reasons. So you can see there are a lot of technical, accounting, and very practical reasons why you might not want to hold the underlying commodity. And then, of course, the last observation is MicroStrategy solved the problem for you. Do you know how to borrow $1 billion at 0% interest? If you can do that, have at it, right? And you go and borrow $1 billion at 0% interest and buy Bitcoin. We did, right? Do you know how to custody it? So we've solved the custody problem, the accounting problem. We've solved the the issue of, do you know how to borrow money against your Bitcoin? No, you can't. We solved it for you, right? So MicroStrategy is providing an institutional gateway to a public company investor that makes it much, much easier to get Bitcoin exposure and own it. In the same way that, hey, if I was running a REIT and I owned a bunch of apartment buildings in Miami Beach, and you said to me, hey, why don't you just let the public company investors invest in their own apartment buildings in Miami Beach? I mean, the answer is they don't want to go and run apartment buildings in Miami Beach. It's a pain in the ass, and they don't know which ones to own, and they're worried about, the inspections, the insurance, the tax, et cetera.
I get it. The key here, I think what you brought up in the beginning of your statement is that it is a commodity and not a security. Gary Gensler has said that everything besides Bitcoin in the crypto sphere is a security and not a commodity, with Bitcoin being the exception. My question is, do you think that will change the regulatory landscape such that Bitcoin will one day have to be classified as a security and then you'll have to reposition?
No, I think that when we made this decision originally back in the summer of 2020, we scanned all 10,000 cryptos at the time. And one of the questions was, which one is the asset without the issuer? Which one is the commodity? Which one is the most decentralized? And our conclusion at that point was Bitcoin is a commodity. So legally, the legal sophisticated opinion 3 years ago was Bitcoin is the obvious commodity. Everything else is a question mark. What's happened since then in the next 34 months or such since we started this journey is consensus has formed that indeed is the case. So since we made that determination with our attorneys, we've had Janet Yellen endorse Bitcoin as an innovation. We've had Christina Lagarde say it's an asset. We've had Jerome Powell say it's an asset. We've had Gary Gensler, the head of the SEC, in multiple congressional testimonies and documents and interviews assert it is a commodity. We've had the head of the CFTC assert it's a commodity. So and we've also had members on both sides of the aisle in Congress and in the Senate make the same observation. So if anything, Bitcoin's status as a commodity is much more certain today than it was 36 months ago. No, I don't expect that to change. The real key here, David, to being a commodity is for no one to control it and no one have the power to change it. So as long as Bitcoin is so decentralized that no one can change it, and as long as the people that hold it are adamantly against anybody else controlling it, then I think you cement its commodity status. And if there's any one crypto asset that has that conservative community view that it should not be changed, it's Bitcoin. So it is the most secure asset in the crypto universe with regard to its legal status.
I like to point to an apparent paradox, which is Gresham's law. So the theory states that bad money drives out the good. It references a time in Tudor England when the monarchy reduced the amount of actual silver used in coinage. And so when people noticed this, they started hoarding the old coins that had more metallic value, had more silver, because they anticipated the newer coins to have less actual silver and less actual value. So what happened was the good money, the money with the coinage with the actual silver, was driven out of circulation. Going back to today, if people agree with you, Michael, that Bitcoin is a superior form of money, wouldn't people just store the Bitcoin and not use it for transactions and then transact with inferior forms of money like fiat? And so the bad money, fiat, will drive out Bitcoin from circulation, and so it will never be mass adopted as a medium of exchange.
Well, Bitcoin's market cap is about 500 billion right now, and the value of these financial instruments that I've talked about, all the other currencies, the securities, the properties, et cetera, it's 500 trillion or more. So Bitcoin is not 1%, it's 0.1%. So Bitcoin can increase by a factor of 10, and it's going to be a 1%er, and it can increase by a factor of 100, And by that time there'll be a lot more of the other stuff. And so when Bitcoin goes up by a factor of 100, it'll probably be a 3-4% of the entire financial universe. The bad money that's get crowded out, David, to be clear, bonds, that's why they're crashing. Silver, that's why it's down 9% in 3 years. Gold, the reason that gold isn't returning any yield, why it's up 1% in 36 months of rampant hyperinflation around the world, is gold is now the glass money or the shell beads money or the stone coin money. It's just the gold bugs haven't quite got it through their head that it's antiquated, shiny rocks. All these things that are underperforming Bitcoin, they're the bad money. In addition, look at the peso. The peso used to trade 1 peso to the dollar. And today the peso is like 480 pesos to the dollar. So in 20 years, the peso has lost 99.8% of its value in Argentina. But in the past 12 months, it's collapsed by a factor of 2. And just last week, the Argentine central bank closed the doors and they said, you can no longer convert your pesos into Bitcoin on an exchange, because they realized, according to Gresham's law, that people are going to be trading their pesos to Bitcoin as fast as they can. You see this going on with the Naira. You see that going on all through Africa. You'll see it going on everywhere in the world. What's going to happen is a stampede from weak monies, but there's so many of them. Right? I mean, bad stocks, bad commodities, overvalued fiat currencies. People are going to stampede from those to strong monies. But of course, if you're one of 7 billion people and you don't have a brokerage account with a big bulge bracket Wall Street firm, you can't just buy the S&P 500 index and try to custody $10 million of the S&P index on an Android phone in Africa on Saturday, right? You can't custody it. And that means you can't trust your counterparties. So what we're going to see is a steady, nonstop stream of monetary energy trickling from the weak monies and the weak assets to the strong assets. And Bitcoin just happens to be the strongest asset class in the world. Poorly understood, still not well understood, but it's a lot better understood when your bank freezes and they seize all your money and you're about to become bankrupt and or impoverished. Then it's easy to understand. It's harder to understand if you're a blue blood limousine, trust fund baby living in upper East Side, and you've got a portfolio of NASDAQ or S&P stocks, and then you think it's just an oddity.
Well, maybe unless they like MicroStrategy stock, right? That would be the exception. Then it wouldn't be an oddity.
We're carrying the flag on the NASDAQ. We're bringing Bitcoin to the NASDAQ, and MicroStrategy's view is we want to be an institutional gateway, or at least one way for the traditional financial industry to discover and appreciate Bitcoin.
I like to talk about transaction costs. A lot of people in the Bitcoin community and the crypto community want to know what's going on with ordinals and transaction costs. So just a bit of context for our audience. The Ordinals protocol was launched early January this year in 2023. It allows you to transcribe any file on-chain on the Bitcoin base layer, which is to say that you'll get a fully on-chain Bitcoin NFT. You can go all the way down to a Satoshi, which is the lowest denomination of a Bitcoin. And coincidentally, in the last week, the Bitcoin average transaction fee has jumped to, I'm looking at it right now, it's at the highest point since 2021. So what is going on, Michael? Is there a relationship here between the use of ordinals and the transaction cost? Some people have speculated Bitcoin is under attack. What do you think?
I think that what we're seeing is a migration of developer activity from the rest of the crypto ecosystem to the Bitcoin base layer. So there's been a lot of stuff done with NFTs and smart contracts and other ideas on all the other cryptos. What you're seeing is Bitcoin is emerging as the winner, and people realize it's the low risk network. When all your banks fail, when all your other cryptos get shut down, if it turns out that your cryptocurrency is regulated, if your crypto security is regulated, if your crypto network is regulated, Bitcoin is going to be the last network operating. And so people are starting to renew their interest in Bitcoin. A lot of capital is migrating into the Bitcoin network. The combination of SegWit and Taproot laid the foundation for people to build more intricate and more interesting applications on the Bitcoin network. But for a number of years, the developer community was focused upon all the other cryptos, and that's because they could issue tokens in order to finance their development. And so it was a fast money, easy money shortcut, and they were being boosted by the FTXs of the world, because FTX had infinite money. Now I think people are starting to ask the question, what's the ethically sound, technically sound, economically sound path forward? Okay. And that's a slower path. It took Lightning, for example, many, many years to gestate and get to the point where people are starting to build material applications on it, because Lightning was supported by venture capital in a conventional fashion. There was never a Lightning token issued that could be wash traded by FTX in order to pump it to the moon. So with regard to ordinals and inscriptions, I think people are starting to ask the question, in addition to moving money on the network, what else can I do on a crypto network if what I wanted was to burn a transaction that is immutable, share it on a ledger to the entire world, and know that it will last forever, right? What sort of things do I want to be immutable for the next 100 years? And what Bitcoin represents is it represents the most powerful cyber network, or the most powerful computer network in the world. If I gave you $100 billion and control of a nation state, and I gave you 4 years and said, attack the Bitcoin network, you could try to buy up all the SHA-256 mining rigs in the world and then try to power them up. And if you succeeded after 4 years, you might be able to slow the network down, but you couldn't stop it, right? So it's very difficult to either stop the network, to undermine the network, and or to block a message. So that being the case, what's the killer app? Well, an obvious killer app is for me to send $1 billion from me to you and know that no nation state can block it. But the next set of applications are to embed any file or any message. If I just wanted to send a message worth $1 billion, right? Like, there are messages worth $1 billion that aren't the money, but they're the message, right? The example I used the other day is, what if I just burned my will on, and encrypted and inscribed my will onto Bitcoin, right? And it was going to convey $1 billion from one person to the other. That's a pretty valuable document, and you probably wouldn't want it to be tampered with by your law firm or by a nation state or by a corporation. So the ordinals and the inscriptions, they created a burst of activity, and they created a bubble in transaction fees. I mean, transaction fees went all the way up to be equal to the entire block reward for a while this weekend. And now they're cooling off a bit. But I think, we had a period when you could do transactions for 1, 2, 3 sats per V byte. I don't think we're going to see those days again. I think we're going to actually see transaction fees that are 10x, 100x that. And then I think over time, you're going to see an avalanche of applications that will be built where the application needs to cryptographically sign and certify a piece of data that you want to last for all eternity. And you either want to burn it because you don't want anybody to tamper with it in 30 years, or you want to burn it because you don't want anybody to block the message from going from country A to country B, even though someone might want to censor it or block it.
Are you, if I may generalize, Michael, are you saying that in the future, Bitcoin's base layer will be so expensive that it will be almost unusable without layer 2s and 3s?
I'm saying this is going to definitely catalyze the development of layer 2s and 3s, no doubt. For example, if you wanted to move $100 right now, there's no way you should be doing it on the Bitcoin base layer. Anybody that wants to move $100, $50, buy a cup of coffee, $25, even $250, you should be doing that with Lightning, right? And we just had a conference last week, Lightning for Corporations. You're going to see an explosion of Lightning activity. Lightning would allow you to move money at the speed of light for a 30th of a penny, right? Why would you want to wait 30 minutes and pay even $1? Or much less $10 or $20. So I think that this catalyzes the adoption of Lightning. The exchanges like Coinbase and Binance were slow to adopt Lightning, but you notice that in the past few weeks, Coinbase has announced they're going to support it. This weekend, Binance announced they're going to support it. So I think this is going to catalyze every legitimate Bitcoin company to support Lightning. You can't really have a respectable Bitcoin offering if you don't have Lightning on-ramps and off-ramps. So yeah, I think that's going to explode. I think that usage of layer 3, like, Cash App, cash tag to cash tag, there's nothing wrong with that, right? Why not 8 billion people and they're moving money on layer 3s at 1 billion times an hour? And then the way I see it is, if it's inevitable that Bitcoin will be embedded in Apple Pay and Google Pay and Facebook apps and Microsoft apps. And, there's 50 million people using Cash App right now that have Bitcoin transactions built into them. So it's inevitable that billions and billions of people will do their daily transactions on those kind of application networks. The significance of Lightning is the open permissionless protocol that's going to be used to integrate 100,000 companies with each other. So when Cash App wants to interoperate with Apple, Google, Facebook, Amazon, and Microsoft across 100 countries, across 20,000 retailers, they're going to use Lightning because that's going to be like the money over IP protocol. Bitcoin is the base settlement layer. So let's go back to my example. People say, well, the transaction fees are too high. Okay, what is the transaction fee to transfer $10 million of an apartment in New York City from me to you? Right now, without considering tax, it's $600,000, David. It's 6%, right? Is that stable? Yeah, there's a $300 trillion real estate market that where the transaction fee is 1, 2, 3, 4, 5, 6% to convey real estate. What's the transaction fee to move gold, $10 million of gold from New York to Tokyo? It's $250,000. It's 2.5%. The transaction fee if I wanted to ship a yacht from the Caribbean to the Mediterranean, it's $250,000.
Haven't you heard, Michael? Fee. No one's going to own physical yachts anymore. They're all going to be NFT yachts. But please continue.
The transaction fee to move $10 million in the form of a painting from me to you, it's going to be $1 million. That's the auction fee. So people think, oh, the transaction fees are high. What they don't understand, of course, is the value of the transaction is you can burn a transaction once in 100 years. And what's the value of actually having a $10 million asset for 10 years? If you buy $10 million of an ETF, the average ETF fee is 50 to 90 basis points. So to have $10 million in an ETF, it costs you anywhere from $500,000 to $900,000 over a decade. So if you think of it that way, you begin to realize that if I actually did a $10 million transaction on the Bitcoin network for $20 or $30, the alternative was $300,000 to ship the oil in a container ship. So, and by the way, if you wanted to ship the oil and store it for 10 years, it's a lot more than $300,000. It's probably going to consume all the value of the oil. So I think that over time, you'll see Bitcoin transaction on the base layer. They'll go from $3 to $10 to $30 to $300 to $3,000 to $30,000 to $300,000. There's no reason why you can't pay $300,000 to move $1 billion from point A to point B. By the way, I'm not just moving it. When a big company sends $1 billion to another big company, that's the same as holding $1 billion of property for a decade. Okay, so what's the maintenance cost of $1 billion of property for a decade? You see, it's off the chart. So we're not just moving monetary energy around and final settlement. We're manifesting it in cyberspace, maintenance free forever. So as you can see, I'm bullish on transaction fees on the base layer. It's not a problem because when the transaction fees spiked this weekend, there was a massive outcry. Binance shut down their redemptions. Everybody went crazy. And then Binance realizes they had to pay a higher fee for redemptions. And then they realized this is expensive. And then they realized, gosh, I guess this Lightning thing that we ignored for years, maybe we can't ignore it anymore. And then within hours, Binance announced they're going to support Lightning. So Lightning adoption, and then the next thing that happened was people said, oh, what if your Lightning channel gets shut down? That's going to be expensive. So you're going to see a burst of activity and investment in better Lightning software, improvements to the Lightning protocol. A lot of third-party companies, if you're a Lightning service provider and you run the channels for me such they don't get shut down, you're actually providing a service right now. So this is a burst of energy for layer 2 application development, layer 3 application development. It's a burst of energy for Bitcoin. And there's already a narrative that all these NFTs and things, they're going to introduce the cultural layer to Bitcoin. Maybe, yeah. But I actually think introducing the commercial layer of transactions to Bitcoin is interesting. And by commercial layer, I mean corporate resolutions, deeds, trust, title, digital signatures, registrations, contracts, right? Cybersecurity, authentication, all of the things that Bitcoin does well, like multi-signature key signing. Well, corporations need that stuff. They need multi-factor, multi-signature authentication for cybersecurity networks and contracts, and lawyers need it. So I actually think this will usher in a renaissance of application development that's just great for everybody. And it'll be based upon a technically sound network, Bitcoin, impossible to hack. It'll be based on an ethically sound network, a commodity network that nobody controls, no issuer. And it will be based upon an economically sound network because Satoshis are the gas, right? See, if I was issuing yo-yo coin gas, I could issue 1 billion trillion yo-yo coins. It's not economically sound, but when you're using Satoshis as gas, it's thermodynamically conservative, economically sound, capped at 21 million. And so that means you have a firm foundation to build the future. And that's what's so exciting about what's going on right now on the Bitcoin ecosystem.
Just a quick question on segue on hacking. You said Bitcoin can't be hacked. You're right. It currently can't be hacked. But in the future, can the development of computers, perhaps quantum computers, be sufficiently advanced enough or powerful enough to break the keys, private and public?
I think there's no one more focused on cybersecurity than the Bitcoin community. So if anybody develops a new form of computing, the Bitcoin community will be the first community to recognize it, and they will adopt it, and they will build it into the Bitcoin mining network. Everybody else will come later and slower. So everything in the ecosystem is less secure than Bitcoin. It's like I've got the car on the street that's most secure. It's alarmed and it's locked and everybody knows that's the hard one. They're going to steal every other car first. So you would be better off to short Google, Apple, Amazon, Facebook, every government on earth and every bank, because those will all be easier to hack first with any computer power. The Bitcoin mining rig is 2,000 times more efficient and more powerful than the most powerful CPU that Amazon AWS will rent you by the hour. So when it comes time to attack computer networks, people are going to attack the Amazon network before they're going to attack the Bitcoin network. It's 2,000 times cheaper to do it.
My final question on Bitcoin, I'll move on to another topic, CBDCs. So you mentioned earlier that 8 billion people eventually will adopt Bitcoin and use it. not on the base layer, but on layer 2s and 3s. Can Bitcoin and CBDCs coexist? Because why would 8 billion people use Bitcoin, whether it be on a layer 2 or 3, it doesn't matter, when they're force-fed or by their own choosing use CBDCs?
Look, Bitcoin's going to coexist with gold, with silver, with the dollar, with the peso, with the bolivar, with the real, with the CNY, with the digital CNY. It's going to coexist with everything. Bitcoin is the strongest money that humanity has. Bitcoin's going to coexist with Apple stock and Google stock and Facebook stock and the S&P index and the ARK ETF and bond funds, right? And commercial real estate. All of these things are out there. I believe they're all weaker forms of property, right? And at the same time, as long as there is an Apple corporation, there will be Apple stock. As long as there is a United States of America, there will be the US dollar. As long as China exists, there'll be the CNY. So nation states will issue their currencies. The weak nation states that collapse may adopt the dollar or the euro or some other currency because their own currency collapsed. But in a world of nation states, we'll have fiat currencies. In a world of corporations, we'll have securities issued by the corporations. In a world of municipalities, we'll have debt issued by debtors. In a world where people live in houses and they work in buildings, we'll have real estate. Those asset classes won't go away, but Bitcoin will go from being 0.1% of that financial universe to being 1%, to being 2%, to being 10%. In a perfect world, David, Bitcoin would be like 50% of all financial assets, right? And it'll be a world where there's $2,000 trillion of stuff and Bitcoin is $1,000 trillion of the stuff. But look, there's still a legitimate reason to own Apple stock. There's still a legitimate reason to own a building. There's still a legitimate reason for you to have a currency. If the government says you have to pay your taxes in the currency, it's going to exist. So when we think about digital currencies, yeah, well, why would I want a digital currency? Because the government said I had to pay my taxes in it. Why wouldn't I want it? Because it might be the digital peso and it's losing half of its value every 6 months. So am I worried about the digital CNY or the digital USD or the digital whatever? No, I mean, they all have a reason, and there's going to be a competition for monies in the free market. Gresham's law is going to hold. And it's a benefit for Bitcoin to be different, right? Bitcoin looks like this volatile asset, and that's a benefit because if Bitcoin looked exactly like the dollar, it would be competitive to the dollar. You don't want to compete with the dollar. We don't want to be exactly like the CNY, because we don't need to. Bitcoin does not need to topple Facebook, Apple, Amazon, and Google to be successful. Bitcoin does not have to topple your commercial real estate portfolio or eat your house to be successful. And Bitcoin doesn't need for the collapse of all nation states to be successful. Bitcoin doesn't even need all the banks to fail to be successful. Bitcoin is simply going to be more successful as people either lose confidence in some of those things, or if you're a middle-class family and you've got $50,000 and you're trying to figure out, should we buy an apartment and Airbnb it, or should we buy some Bitcoin? When people realize it's hard to run an Airbnb business for the next 30 years, and they don't want to paint the apartment, or they don't want to deal with the water damage in the apartment, they're going to say, I guess Bitcoin looks like better property than an apartment that we're going to Airbnb. So as people realize that Bitcoin is just a better idea, it's going to demonetize those other assets in a gradual, progressive way. And David, that's the way you want it to happen. We don't want every government to collapse. We don't want every bank to collapse. We don't want every currency to collapse. I think it's sad that in Lebanon, the currency collapsed, or if the currency collapsed in Venezuela, it's sad. I don't want that for the US. What I want, and I think what I see is that Bitcoin is progressively demonetizing weak assets and things that shouldn't be money. I mean, you don't really want people to run around with seashells and the giant stone coin of the Yap people You don't want that. That doesn't move the civilization forward. So there are certain bad assets that will be demonetized. And as they're demonetized, it creates competition, right? For example, if I run a country in a bad fashion, in a poor fashion, and my citizens have no choice, if they can't leave, they can't take their property with them, they have to use my bank and they have to use my currency, that's a pretty awful situation. And I have a lot of power and I might abuse that power. But when the citizens of the country have an option, they can put their money in a bank in cyberspace outside of my control, and they can leave the country with their money, then maybe I'm going to be a bit more thoughtful and maybe a bit more humble in my political aspirations, and I will treat them with respect. And so I think Bitcoin is a balance of power. It's a check and a balance on the unmitigated power of a politician or a corporation or a bank. And so in that way, it's kind of good for the world because it shifts power back to the 8 billion people and to the individual, and it shifts power to a corporation in South America that if you'd had no choice but to use the state-sanctioned bank and the state-sanctioned currency, you don't have that much power. But when Bitcoin exists, you have a choice. And when everybody knows that you have a choice, if you work for me and you're not allowed to leave, that's called slavery, And if you had to study the history of slavery, it's pretty awful. No one liked it, and it's very inhuman. But if I know that you could quit in 30 minutes, I'm going to be a lot more polite and thoughtful and considerate in my treatment of you. And so Bitcoin is allowing people to escape economic slavery. And I think it will progressively bring out the best in everyone. There are some nations that I wouldn't live there. They don't treat people well. But there are other nations that they're on the edge, David, right? They're on a balance between the good and the bad, and they could go one way or the other way, right? And there's hope for them. And so if Bitcoin starts to grow in those nations, I think Bitcoin will tip them from going to the dark side and tip them back to freedom and sovereignty and respect for the individual and humility, right? And liberty. And so that's what I see. It's not black and white. It is a dynamic equilibrium, and Bitcoin's doing its thing.
Thanks for watching part 1. In part 2, we'll be discussing the future of technological advancements, how AI will change our lives, and the future of education worldwide. Stay tuned, and for now, don't forget to subscribe.